Observe the moment of impact, a focused drop hitting a dark, still pool. This visual metaphor perfectly encapsulates the principle we're discussing, the ripple effect of vacancy.
$1,500 vacancy on a digital ledger just represents the obvious financial loss of a single month's rent. Relying on that single top-line number ignores the secondary financial drains occurring simultaneously across the entire business. An empty unit is an operations problem hiding in plain sight. It marks a point where your internal systems have stopped producing revenue and started consuming capital. When an operator only tracks lost rent, they miss the friction in their turnover process that quietly erodes their bottom line. Current data shows the actual cost of a single tenant turnover now averages $1,750. This cost is compounded by external factors. Maintenance expenses rose 12%, and compliance regulations raised the average workload by 60%. With external costs climbing, any inefficiency in your internal process directly tightens the squeeze on your remaining profit margins. The drain on a vacant unit starts with its interconnected revenue nodes. An empty unit immediately stops related income streams, including pet rent, utility reimbursements, and parking fees. Then there is the readiness gap. A unit can be physically empty while remaining unready for the market, held up by delayed repairs, cleaning schedules, or pending inspections. This lack of readiness consumes labor hours, vendor time, and management attention that could be deployed elsewhere. The unit continues to pull resources out of the business every day it sits between tenants. Analyzing the timeline reveals how slow response times convert a standard turnover into a profit leak. The critical handoffs are between initial inspection, vendor scheduling, and the final listing. Every day added to the repair schedule extends the vacancy and makes financial recovery difficult. Disorganized communication and sloppy turn quality also impact the prospect's experience, which lowers your brand reputation and slows down future demand. Resilience is the metric that determines if your operation is driven by proactive systems or if it relies on reactive manual intervention. A single vacancy acts as a stress test for the entire business, showing whether your process is built to recover quickly or if it slows down under pressure. Transitioning from manual, reactive tasks to structured systems allows move-outs to be handled as a standardized process rather than a crisis. With 80% of tenants now preferring digital communication and payment, implementing automated workflows is a requirement for maintaining an efficient operation. To improve your margins, you have to look past the top-line rent and identify exactly where your turnover process is leaking time and money. You can find the 10-point operational audit and the chaos to cash flow calculator in the pinned comment to begin your own diagnostic. Adopting these targeted operational changes helps you standardize your turn process and stop the recurring leaks associated with vacancy.
Increase tranquility. Don't leave your ROI to chance. Use the 10-point audit in the pinned comment to secure your cash flow.